Thank you, everyone, for joining us today for what I've called the Condo Conversation. We're going to discuss what home buyers and sellers should keep in mind when it comes to financing condominiums, which condos are short for condominiums. Um, and then also just how that's different from financing a regular single family home. And so to help with this conversation, I've got Billy Slobin here with the Slobin Group and the Mortgage Link. He's been in the real estate mortgage industry since 1985. He's a branch manager and has been a leader in the mortgage industry with 41 years of experience. He's closed over 3 billion in mortgages and has been nationally ranked in the top 200 loan originators. He can be your trusted mortgage professional, whether you're a first-time home buyer or a multimillionaire. He is also licensed to provide mortgages for properties in Michigan, Florida, Kentucky, Tennessee, Indiana, and Ohio. So thank you,
And
Billy, for
many other states as well.
you have other states? Oh, what are the other states?
A whole bunch. You know what? I got to get the list, but it's like 30 of them we can do it in.
Oh,
Like 30
okay. So
states.
that's a good amount. So, pretty much if
Yeah,
you're anywhere in the US, see
it's
if you
worth checking with me.
If you've enjoyed watching this video and would love to stay up to date when I have more content like this or something similar that you may be interested in, please like and subscribe to this channel and click the bell so you get notifications. And I hope you have a great day.
I'm happy to be here today. Always fun to talk with you, Patrice. Patrice does a great job, real estate agent. She's smart, honest, responsive. And what more can you ask for? She answers the phone and returns phone calls. Nobody does that these days. So she's a standout right there.
Well, thank you so much. I appreciate that. So the main question, of course, anybody who doesn't know, how is the mortgage process different from condominiums compared to single family homes?
Okay, so when you're buying a condominium, the first thing is there's a separate entity of people involved, a management company, an association, and there's a plethora of paperwork needed from these people to let the lender know that the condominium complex is solvent, basically, is sound as far as their business goes, budget, and so on. So when you're trying to you get a client and they want to buy a property, they may want to buy a condo or a house, so you pre-approve them, and you pre-approve them with their pay stubs, bank statements, W-2 forms, whatever's appropriate to their scenario, and you pre-approve them, and they want to buy a house, and so they pick out a house, they have an inspection, they buy a house. When you're buying a condominium, it's vastly different because you then have to begin the segment of the mortgage process of getting information from the management company, and that is extremely costly. The cost of it has quadrupled, quintupled in the last 5, 6, 7 years, and you're dealing with some people who have no interest in the transaction, so there's no sense of urgency. It could take a long time if it happens at all, and I've seen it all, and I've seen it as recently as 2 days ago.
Oh,
Uh, and then they send you incomplete paperwork. And at the end of what they sent you, the last document can still kill your transaction. So buying a condominium can be a harrowing experience. And really, I was talking about this with a colleague the other day. In my 41 years of doing this portion of the process has really not gotten a lot better because it's really the same. It's actually gotten worse because back then you could get somebody on the phone and get them to fill out the condo questionnaire, which gives you some of the information that you need. Now you're forced to go to a portal, pay money to the portal in many situations, and still days and days and days can go by because on that end of things, they just don't care. They're not the realtor, they're not the seller, they're not the buyer. They just don't have an interest in it. And so they've not really gone to any lengths to make that part of the process better. So, not here to tell you all to buy a house instead of a condo, but you might want to buy a house instead of a condo, unless you could find a condo where the management company is really good and you wouldn't know that, and you could Google reviews if you want, but that's not going to be a reliable source. It's very tough, and you're going to have question marks fairly deep into the process in many situations. So, should you really want to buy a condo, prepare yourself for that adventurous part of the process. And I'll leave some of the answers for the other questions.
Okay, yeah, because I've had some scenarios, but I've also, I mean, I also have had some good scenarios
That
too.
went good? Sure. Sure. Some of the management companies have people working there who care about their jobs and just take pride in their work and get you what you need and cooperate with you. You can run into some good people, but as you know, just like any other line of work, the percentage of good people
It's very
can make it
small.
tough. It's small.
Yeah, and this one is a little bit, it's not on the list, but that brings a question. Because you know some of them like the person that's over it is someone that just lives there, right? Versus a
Yes.
management company. Do you find that
Yes.
there's a big difference when there's a management company versus just individuals in the
It just, you know what, you can get if you run into a person who's the person at the association, and they're like my sister-in-law, super duper on it because she did that function at her condo complex for a long time. You run into somebody who's a retired corporate person, super sharp, takes pride in their stuff. Bam, smash. Within an hour, you have every single doc that you need, and that's the golden ticket, the golden goose. But you just don't run into it super frequently.
Okay.
And I've got a handful, quite a handful of condo transactions over the last 45 days, and we've seen every single scenario you could see.
Yeah, I had one where I've gotten more information than I should ever have to look at because I end up doing the job to get it closed, unfortunately. Okay,
Yeah,
so condo questionnaire is the big part of the lending process.
yes,
Can you explain more about the condo questionnaire and
yes.
how this truly impacts if it's going to close or not?
So a condo questionnaire is a document that's got 20 questions, so to speak, on it that you either the management company or the association people fill out. It says how many units are there, how many units are owner occupied, how many units are owned by any one party. Is the complex complete? Is the complex subject to additional phasing and building? How much fidelity bond coverage is there? A bunch of different questions, and I can provide an example for you of some of the other ones. Uh, who's responsible for maintaining this? Who's responsible for maintaining that? And that document, when filled out properly, gives us on our end a pretty good understanding of whether we can lend on it using traditional Fannie Mae, Freddie Mac guidelines, or if it needs some form of alternate financing. If it needs some form of alternate financing, that's when the adventure begins. If a condo questionnaire comes back with all the right answers, I mean, you pretty much, as long as they provide the other docs, which we'll talk about, you keep moving and it's great. Boom, boom, boom. But if it comes back and says, well, no, there's, over 50% investor ownership, or there's 20 units and one person owns 14 of them. And all this is a function of what happened in '08. There was fire sales and people just bought up stuff. And that's when a lot of these complexes became much more difficult to finance. And as well, tying into a future question we're going to do here, that's when probably 50% of the complexes stop being FHA approved.
Oh, okay.
And
Didn't
I'll
have
explain why when we get to it. So if you get a bad quote unquote condo questionnaire, it doesn't mean the deal is done, but it means you're going to have to start digging. The lender is going to have to start digging to see if he has another way of doing it. Some of the other things that will show up on a condo questionnaire are there special assessments. Does every person in the unit have to pay money to do the roof, to redo the sidewalks, the parking lot, the pool, whatever it is? Do they have enough reserves in the operating budget? Oh, they don't have the reserves. Oh, huge. It's all this stuff that like comes to light is if they fill it out properly. Sometimes they don't fill it out properly, and that stuff comes to light deeper into the process. Is there litigation? I had a person trying to buy a condo not that long ago, two different people trying to buy expensive condos in Florida. And both of them, there was heavy litigation going on, lawsuits, slip and falls, this and that, suing the developer for not finishing, whatever it was. Both those people, I helped them close. They still wanted the condos, so we took cash out of their primary residence and paid cash for them.
Mm.
Getting a mortgage on those two was not something that was going to happen anytime soon. So if somebody had come to buy those who didn't have significant home equity and a sharp loan officer with another game plan, then they would have just had to back out of the transaction.
Yeah, I had one a few years ago where we were waiting for the lien releases. I guess we came at a good time where it was almost done, but it took us a whole extra month or so to close because
Yep.
of that.
Yep.
And that can happen anytime.
Happen anytime. And when something takes an extra month to close, no matter what caused it, you know who's getting yelled at? You and me.
Yeah.
Yes. Though we have no interface with any of that stuff, but that's how it works.
Right, because you get people who are used to also, they go to a store, they complain enough to get what they want. We can't do that. Yeah.
Can't give you what I don't have.
Yes. I want to close probably even more than you do. So
Right. Much more.
And so we kind of talked a little bit, but explain the difference between a warrantable condo and a non-warrantable condo.
Okay, so a warrantable mostly means that it passed the condo questionnaire test or didn't. So if a condo gets a good questionnaire and there's not too many renters and there's not too many investor owners and they have the right fidelity bond coverage and they have the right budget and they're not getting sued, if there's a bunch of good yes answers on the condo questionnaire, much more often than not, the condo is warrantable, meaning it meets Fannie Mae, Freddie Mac, or even FHA guidelines, and you can get a loan on it and no problem. If it's non-warrantable, which could be meaning it failed any of those questions, or it's new construction, it's conversion from apartments to condos, it's, like I say, a new build, and the builder, the developer, is still the management company and the association. He hasn't turned it over to Kramer Triad or whoever happens to manage. That's when a condo would be non-warrantable. And then you're treading on thinner ice. You're probably your lender is going to have to use a third party source to finance a non-warrantable condo, which means less control for the lender and a more cumbersome process. We closed a couple of them in the last couple of weeks that were non-warrantable, and it wasn't bad, but it wasn't fun. The timelines are a little different than a regular transaction, so to speak. Carefully consider condo purchases. We're not even talking about the association costs and changes that are unforeseen and there's no way to predict. So a condo can become warrantable or non-warrantable at any time, but besides the listing and buyer's agent connecting with is there anything else you recommend a realtor or loan up?
Oh, you're asking my question for me?
I'm kind of just reading it over. So the smartest thing I would always recommend, if a client of mine, if a realtor friend of mine, I would say always see if you can get the homeowner to get the condo association or the management company to fill out a condo questionnaire in advance. That would be really smart, which I've told that to a lot of people a lot of times. Um, if I were a buyer's agent, and I work with a lot of buyer's agents, and I make this recommendation frequently, it's seldom heeded, but this what I would do is I have a potential buyer for your property. I need a condo cert filled out. And they're going to say, well, that's $750. Well, the earlier in the game that you have that information, so you could get an inspection. I know condos don't need inspections like houses, but they do. You could pay for an inspection. You could pay for an appraisal. And sometimes those questionnaires and all that other stuff's going to trickle into you back to the lender slow and even past when those two items were done, and then kill the deal when you've already wasted money on it. So somehow or other, getting the HOA condo info, like, and when you're starting out with one that's visibly non-warrantable, you want to get that information as early as possible. Because, I mean, non-warrantable condos typically require as much as 20% down. When, the client's pre-approved and wants to put 5% down when it flips over. And they're like, oh, well, I can't do 20% down. Too bad they already wasted money on an inspection and possibly an appraisal. There's got to be much more diligent and aggressive upfront looking if there's any early evidence of a condo not being warrantable. Now, if the listing agent says, and can show us, and I'm sure modern times, computers, 3 condos have closed in this complex in the last 3 months, all conventional financing. Okay, you're probably really good to go. But if that's not the case, and if it's not easy evidence, there could be an issue somewhere.
Yeah, because my thought was too, even if I looked at the sales history, what if they did put 20% down and I don't know, I don't
Right.
have proof of that.
Yeah.
And even if I did have proof of that, they could just be a good qualified buyer and say I wanted 20% different, not be a non-warrantable thing. I did
Yes.
fortunately have one deal where it was just a simple question and answer, and the HOA rep said, "Yeah, it's not warrantable." So that was easy, but
Yes.
most of the cases they want you to pay for something to get that information.
Yes. And I mean, one of the cost, I think one of these transactions required an $800 condo doc fee up front for the buyer. Fortunately, the client had money. No one without a lot of money should even consider buying a non-warrantable condo. Just not a thing. You're talking 20% down and you're talking a lot of money for the upfront docs, and that's not even getting into the association fees.
Yeah, in most cases, your inspections for a condo is not going to cost you that much.
Nope. But docs and the willingness of the developer to participate in getting you and the lender those docs, that's a whole nother story.
Yeah.
So are we on 5 or 6 now?
Yeah, I'm skipping down to 6 since you kind of answered
Okay.
the other
Yeah.
two.
Yeah.
So in general, risk and benefits. If someone's like, I gotta have this condo, I love it, what should they consider? Because the main benefit for me is just seeing that, okay, well, you got the place you really want to be. You're buying because you
Want it. Well, number one, potential resale issues. That's an issue. Because you don't have a big pool to choose from of people who can roll in and buy the place from you. 2, the drastic unknowns of what the monthly condo fees are going to become. Assessments. Who knows? You don't know. It depends. Some non-warrantables are new construction, so you're thinking, all right, everything's fixed and new. But sometimes a non-warrantable condo can be non-warrantable for reasons other than new construction, and who knows what's going. Roof assessments. Built. I own a place in Miami, Florida. I've had three $50,000 plus assessments in the last 10 years. That math can be ugly. Buildings get older. Depends on where you're buying, of course, but hey, the weather near the ocean is unforgiving. The weather in Detroit and Chicago is unforgiving as well. Roofs need to be replaced. And when they say to you, okay, the association sends a bill and says, okay, you can send us $50,000 or you could pay $1,000 a month for 50 months. These are realities, are financial realities that could put people down. And so tread very lightly when you're getting involved in something like this.
Yeah, because the other things too are like, it can, yes, it can come non-warrantable, be warrantable. But I feel like a lot of that kind of, it stays the same because you have factors of, for what you're talking about, okay, the HOA fee is high, they didn't do this. So a lot of the lawsuits come from, right, the people that live there because they have issues. So now you're putting
Right.
litigations on there. And then you've got
Right.
scenarios of where you, what was the other thing I was going to say? Oh, so you can't sell it, right? Because it's, you gotta get a
Right.
cash buyer or someone that's going to put a good amount
Yeah.
down. Okay, well, I'll rent it out. Okay, well, now we have a lot of rentals, and that alone will keep it non-warrantable.
And a lot of
You can rent it
complexes
out.
have that plus rental rules. So a buyer buys it and they owner occupy it, and but then they rent it out. Oh, they want, I'll Airbnb it because everybody under the age of 40 thinks they're a landlord mogul. I'll Airbnb it. Hey, guess what? Shortest rental is 6 months. Shortest rental is a year. You're not Airbnb nothing. So, or the city doesn't allow it, depending upon where you are.
Yeah, because I've had
So,
people come to me saying they want to Airbnb a condo, and everything they've sent me, the answer is always no. You cannot
no, nope,
Airbnb.
no. So there's that, and I think that's a pretty significant issue. Uh, when you're buying a new construction condo, what's different? Oh, the
Let me,
condo.
let me ask the question. Yeah.
Yeah, I'm sorry, Patrice. You know me. I'm fired up. Go ahead.
Yeah,
I'm trying
so
to.
you kind of touched on it for sure, but when someone's buying a new construction condo, what's the difference with the condo questionnaire or condo approval process?
It's much deeper. You know, the builder has to provide all kinds of documents that some builders have an office who can provide everything, push the button because there's a nice person working in that office who helps with those things, or they're a smaller builder and they're like, sorry, man, I can't help you. We don't have that information. So, I mean, we just had one yesterday where it's an existing condo, but it almost flipped to a non-warrantable situation because neither the association or the management company could provide the info that we needed, and it wasn't exotic information; it was just regular stuff. Uh, New construction is tougher, it's deeper, and it's automatically non-warrantable.
Mm. Yeah, because you got your other issues of there's no previous sales too, but that's a different
That's a
topic.
different aspect of it. Back years back, there was a condo complex not too far from here, Northville, where the developer got with me because I was friends with and working with a lot of the salespeople on some of their single family sales, and they were doing a whole complex, mile by mile by mile of condos, and they provided us with 1995 enough paperwork that would fill my office to the ceiling, wall to wall. And I took that information to a couple of lenders, sources of funding that my company was connected with, and got what was called a prior commitment, where I could lend without any of this intrigue on all these new construction condos within this complex. We
Mm.
wound up doing loans on probably 300 properties over like 5 years and went through none of this stuff It was just like buying a house
Hmm.
because you're asking these people who would come in to want to buy a house, property, condo, and give big deposits and prepay for countertop, all money, money. Well, they had to know that they could really get a mortgage. So between their front office and my front office, we collaborated and were able to cut out all of this stuff. And that was 30 years ago. And like I said, it went on for 5 years till the complex was complete. I probably did 60 to 70% of the units.
Hmm.
The other ones were either cash or they went to their own bank and either fought and struggled or maybe they didn't. But we did seamless situation because somebody was willing to do all this legwork up front. And it was all done by people, you know, in an office providing, we need this, here's this. And a very good collaboration and a very smart way of doing things. If I were in condo building and new construction building is obviously not as prevalent as it was in 1995 because it just isn't for multiple reasons, which is a whole nother show we can do. Uh, if I was building a condo complex, I was a developer builder, I'd find a lender, and they like to go to. I'm not going to pick on large commercial banks. They like to say, well, they're providing the construction financing, so I'm going to send my buyers to them. They know our paperwork. Well, no, they don't. They're different departments. Getting a retail loan officer at a retail mortgage company like what I am or what I was then, who helps homeowners buy houses, not developers finance big projects and make things easy on your buyers. It was brilliant, and it would be very smart if any builder had the foresight to do something like that now. They would cut out a lot of the intrigue.
Yeah, I mean, they should want to sell the properties, make it easy, you know.
Especially when you have new construction people coming in writing checks, $40,000 deposit plus 18,000 for this change in a wall or granite or whatever it is.
Yeah. So, with FHA, of course, you can do an FHA spot approval because a lot of condos are not going to be FHA approved. Can you explain how that works?
It doesn't. I've attempted in my whole life 20 times, and two of them have worked. And they both took about 10 to 12 weeks, which we know no seller's really going to wait for.
Yeah.
You can get all these documents, but at the end of it, HUD's going to take a look at one of them and say, well, no, we're not doing that. We've run it all the way to the end so many times, and it's a losing proposition. Now I'm here to be honest, not negative, just
Oh, I
transparent
like
and honest.
honesty. I'm honest.
Don't do it. Don't do it. Find a conventional buyer. I've had people come to me try to do this. I said, we're not doing it. We have a much better chance of fixing your credit score. Let's fix your credit score, and then you can buy conventional.
Okay. So then I think the one deal that worked out for me that was the only attempt, um, it was risky, but the lender, so the complex I had listed, the lender said they used to be FHA approved,
Okay.
but only recently did it become not a thing. And so I guess that's how that worked. But I've never had another FHA spot approval process. So I guess I was fortunate
So
for
you're
that.
1 for 1. You did great.
Yeah.
Yeah,
That was a
I've
few years
tried
ago.
for years. I tried until maybe 4 or 5 years ago, Patrice, where I find because I'm a when it comes either I'm a slow learner or I'm very stubborn and I don't like to give in. Finally, after taking one for about 12 weeks and submitting to HUD everything they asked for over and over and over, I realized these are not people you can deal with, and I'm not doing this anymore.
Oh yeah, that is a lot. That's a lot. So yeah. And then I mean, cause like so since then, I've had people say, we do the FHA spot approval, and I'm always asking, but see, it never goes anywhere either because the listing agent's like, well, we don't want to
No, no,
FHA. We
no.
don't even want it, so let's
I
not do
mean,
it.
the condo would have to be on the market for 6 months with no people for a listing agent to be willing to give someone the time to even try with no guarantee of outcome.
No
That's
guarantee.
that's the part. If it was 10 weeks, but if you give us everything we need, it'll work. That's one thing. But when it's 10 weeks and maybe it might work or probably won't work, that's not a good idea.
Yeah. Okay, good to know. And I've heard different things. I've heard that, which I guess to you, I already know the answer, but just to clarify, unless there's something I'm missing here, like some lender will say, "Oh, I'll know this before we even have the appraisal." Maybe they're doing something ahead of time. And then I've had other lenders say, "No, we won't know till towards the end if it's FHA approved."
That's the honest answer.
Okay. So the other person just telling me something. Okay.
They just want to
Um,
put a loan in the pipeline, whether it closed or not.
okay. And there's no options for VA spot approval. Is that correct?
Well, that's different. That's different. I have a coworker who's a VA expert. A denied VA condo doesn't always mean the deal is dead. One of the biggest misconceptions of VA lending is that if a condo project is denied by the VA, a veteran can't purchase it. It's not always true. If the condo project was denied within the last 2 years, the VA may allow a 1 unit waiver, also known as a 1 unit approval exception. Here's how it works: the veteran signs a simple acknowledgement letter. The lender submits the waiver request to VA Construction and Valuation Department. The VA reviews the request for a one-time exception. In many cases, this process has a high success rate and can keep the transaction moving. The veteran's acknowledgement letter confirms that they understand the reason for the project's denial and are requesting a one-time waiver to use their VA home loan benefit to purchase the condo. The bottom line: don't assume a recently denied VA condo project is the end of the road. I guess it's worth a try, and you might have a little higher percentage of success than on working with VA versus working with HUD. Now, I wouldn't recommend doing this unless that's it. And I also wouldn't recommend doing it on an $80,000 property, to be honest with you, because it's
Yeah.
going to be a lot of work, a lot of time, and it may work, but I'm told the percentage of it really happening is a bit higher than an FHA spot approval, which is,
They want to help the VA buyer.
they want to help the veteran more than they want to help an FHA buyer.
Okay, well, I'll keep that in mind. That I can answer. I'll be able to answer the question correctly. But
And we love veterans, so
yeah, okay. So are there any condo specific challenges, which you probably talked about some you're seeing with buyers who have down payment assistance, such as MSHDA when
well,
buying a condo versus a regular conventional loan?
I've never closed a condo, and I do a lot of Michigan loans, though that's not the only thing we do. Uh, FHA, because so few are FHA approved, but I've closed endless condos FHA Michigan conventional. That's no different than a conventional 3, 5, 10% down transaction having Michigan involved in it. There's no additional rules.
That's
But if
great.
somebody comes to me and wants to use MSHDA, needs to use MSHDA, they got to be conventional. Or I've given out a letter and said, go find a FHA property I've had a couple close FHA, but they were complexes that were on the FHA approved list, which was not a ton of them. Couple in Southfield that I'm aware of, but you got to look up on the HUD website, not take the listing agent. FHA agents will list a condo and say FHA VA conventional. And the first thing we do on our side here when the client gives us the address is we look it up on the HUD's website, and that expired in 2011.
Yeah, they're just putting it on there and
They
not
just
even
putting it on there.
figure it out. I had
Get up here.
one where he literally accepted our offer and he said after the fact, so I don't know if it's VA approved. I said, well, we know it is though. We know it.
See, people doing sloppy work.
Yeah. Yeah. I mean, just like why wait till after
Why?
everything is signed?
Right.
At least tell me when you get the offer. I'm not sure.
Yes. Yes.
But yeah. Okay. So what about other down payment assistance with the conventional loan?
Well, really, when talking about condos, you're you unless you find that needle in a haystack FHA approved complex, but when it comes to conventional, really MSHDA is it. There's a couple Fannie Mae and Freddie Mac, home ready, home possible programs where a quote unquote low income buyer, 35,000 annual or below, can get 2,500 or $3,000 of assistance. Uh, Outside of that, most of the assistance products, and we have a couple in-house ones, but they're FHA based. So you're not buying a condo with it unless you find a complex that is HUD approved, FHA approved.
Okay. And was there something you wanted to add when you were talking before about how these condos end up being not FHA and VA approved before, which I guess you said before they were, and then they.
Well, in the old days, and there were old days, meaning, I've been in the industry since mid 80s through the 90s, through the 2000s. And back then, FHA approved condos were probably better than half, better than 50% of them. You look it up, most of the time, not all the time, but a lot of them worked. When the world ended financially in 2008, and it really ended 4 years earlier, but it didn't manifest itself till '08. Every complex stopped submitting their paperwork to HUD because it costs money,
Hmm.
time, money, and probably because the homeowners association, the people are like, well, we don't want, and this is a slippery area to tread in, but we don't want FHA buyers in here, whatever that means. We don't want people with lower credit. We don't want people with lower credit scores than us in here. Uh, but more so, I think it was the money, time, effort. I'm sure many associations went from this many people to this many people. Management companies went from this many people to this many people. And an economic, meaning a financial meltdown, they just didn't want to keep submitting their paperwork annually because it probably made their accountants have to do work, cost money, time, effort. So it just faded away.
Mm.
And we saw that as we approached the 2010s. That wow, I did loans in this complex. This meant you have history, right? And you see that it diminished down to almost nothing.
Okay, that's unfortunate, but mostly just because they didn't want to pay to keep it together. Okay.
Money.
Okay, and so we kind of talked about how kind of questionnaires can definitely delay the closing time depending on the HOA's responsiveness and time of getting it done and getting it back. Um,
And
are
time
there
is everything. I mean, time is everything, Patrice.
yeah.
You got realtors holding a gun to my head saying this will close in 28 days, right? I'm like, yeah, they get the paperwork back to me. I can't go. I said I cannot go to the management company and force them to fill out the paperwork, to provide the copy of the master deed, the bylaws, the fidelity bond, fidelity bond is a document that basically says that the members of the board won't steal the money that's in the reserve fund. So I mean, there's so many moving parts that people are not aware of.
Yeah, they could be stealing the money.
And as a wise man once said to me, an industry friend of mine, he goes, "I got to manage downside risk here." So yeah, 30-day PA, sure. I close loans in 3 weeks all the time, but you're reliant on other people to be efficient and on the ball with their paperwork.
Yeah, I end up doing a lot of babysitting, but I learn a
That's
lot that way.
that's really
Some
good.
people
That's there's
jump.
always a silver lining, right? That's the silver lining, knowing more.
Yeah. So, would you have any other like kind of specific reasons why it could take longer than a single family home to close?
That's really it. The appraisal process is super easy, typically on a condo, though the appraiser requests some condo information because there's a part of the appraisal where he has to say, really redundant to the questionnaire, how many are owner occupied, how many are rented, does one person own more than so many of these, so they could slow up the appraisal process too. And
Mm.
timing, and the appraiser had time to work on it one day, but then he didn't have time to work on it. When they got him the paperwork a week later, it's it's a process that is loaded with potential roadblocks. I hate roadblocks. I like closing loans fast before they
Yeah,
quit their job, before they stop paying their bills, before the gift funds coming from the grandma are no longer available, before they don't pay the rent that month, before, before.
yeah, yeah, because that's the thing too. I mean, it's not just about I want to close today. It's like, well, if we don't close today, we may not be able to close tomorrow.
Yes, that's right.
Okay, so this is a whole different topic, but as we know, the student loan rules have changed, and we will essentially have to pay more for their student loans for the most part. But then you have increased interest rates and all this inflation and other things going on. What would be your best advice for buyers looking to buy a home now or sometime in the future?
Talk to me now for a coaching session. Get with me and let's map it out. Let's understand where you're at. Let's understand what needs to be fixed, if anything. Let's talk about possibly restructuring your student loans if necessary. When somebody comes to me 6 months before they plan to buy, the percentage of their success rate in closing and having a non-stressful process goes up by about 95%.
Yeah, I always tell people if you know you want to buy, it's better to be prepared than you wait and say, okay, I've got a month or two to buy, and then you're not prepared, and now you don't know what you're going to do because you got to be out of your other place at a certain time. Yeah.
Yes. I mean, many times, Patrice, people come to me and say, I'm not buying for 8 months, but I want to get pre approved. And I'm like, cool, let's get you in the system, build a relationship. And then when the letter goes out, they buy a house in 2 weeks. It's so common. So common. Once they have the letter, see, the reason they say I'm not going to buy for a year or 8 months is, sometimes they say, oh, it's because of my lease and this and that, but it's really reticence and confidence. But when they see that it's really a real thing, I mean, houses and condos are going to cost more next year. You just don't know. So strike while the iron's hot.
Yeah. And at least you know at least at least you have the time at the end of the day.
Yeah. Yeah. Yeah.
Okay. Well, that's all I had. Is there anything else you wanted to add?
Since we're just talking to a lot of people, my name is Coach Billy Slobin, Slobin Group in Farmington Hills, powered by the Mortgage Link. Uh, my phone number is 248-535-0465. Can contact me direct. Patrice will give you my number. Uh, Come to us for real advice, the best planning possible, honesty, transparency, and I answer the phone. If you call me, I answer the phone. Nobody answers the phone. Uh, Contact Patrice. She's a great agent. Like I said, she answers the phone, cares about her job, cares about people. It's people, not numbers. Knowledge is everything. So contact her and I, and we'll provide it.
All right. Well, thank you so much. And you are definitely one of the best lenders I have come across for sure. So Well, on originators, how it works.
Thank you.
Branch manager, however you want to.
There we go. All the above. Football coaches. So, hey, everybody have a great day. Patrice, thank you for having me.
Yes, thank you. And I hope everyone has a great day.